Good morning, everybody. Welcome to the Lock in Your Success Options Trading for Income Weekly Update for June 1st, 2015. Before we get going, we would like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please note that we are using hypothetical computer-simulated trades and or results in the presentation, which are believed to be as accurately represented as possible. However, live results may vary. If you're watching this on YouTube or some other venue, come on over to our website, check out our programs. We have the super simple spreads. We have the M3, the Bearish Butterfly, the Rock, the M21, and some nice one-on-one coaching programs. Also become part of our inner circle. Join our mailing list, get your free report, 7 secrets to become a successful trader, and sign up for this free weekly webinar. Stay tuned for our programs currently under development. We have APM Squared, which I am working on diligently to get out in June. I hoping to at least have the people who have attended the program to have the recorded part in June, and we're just going to test out our systems here on our website, make sure that everything's working okay with that, and then we'll get it released to you guys as soon as possible. I know that I've been asked a ton of people about it, and I am working on it as quickly as I can, so I'll get that out as quickly as possible. Also, immediately following that, we'll be working diligently on the Trading Triangle book and pushing that into an online program as well going forward, and it's going to kind of mirror our Trading Triangle 101 coaching programs. We are going to go into some directional spread trades towards the summer next year. And like I said, I'm always open to suggestions on what types of programs anybody would like to see. Let's see, APM Squared is where we talk about advanced personal management, advanced position management. It's an advanced version of the program. So if someone's come in and they've traded the M3 for a while, they're familiar with the Rock trades and the Bearish Butterfly trades, then this would be the next logical step for them to go forward and advance the trading. So I have not set a price for this yet. We're looking in the $14.95 range for the online program. So that's most likely where we're going to be. We'll probably offer some sort of a promotion once it gets going, which I haven't had a whole lot of chance to think about. But that's what we're probably looking at for the online program. And okay, and that's it as far as that goes. I have just some other kind of housekeeping things to do. I realize that some of the GoToMeeting invitations have had some weird times on them. Just so that everybody knows, the meetings are 9 a.m. Monday mornings. They're into the computer that way. In other words, on my end, they're going out at 9 a.m. And apparently what I've contacted GoToMeeting about that. Apparently what they do is they tailor the invitation to the computers, the receivers' settings on their computer. So if you're getting some sort of, I guess some people are getting Central European Standard Time, and some people are getting some other odd times. And according to GoToMeeting, that is due to the settings on the receiver's computer, and there's nothing I can do about that on my end, and they're suggesting to contact them. I know this isn't a great solution, and I'm not happy about it either, but what they're suggesting, if you'd like to fix that, to actually contact them, and they'll go through your settings and do whatever they need to do to get the times right on the invitations. So that's what's going on with that. And that's all we have. So let's kind of get into this. We have the market. Let's take a look at what's going on there. You remember, I don't know, I guess for 3 weeks or so now, I was thinking that the market was going to come into this sideways range and the S&P was going to run sideways. I was basically saying that, hey, the charts are bullish, but I do think we're going to spend some time sideways. We did spend some time sideways. We also broke out higher on the SPX, and at that time, it was another one of those breakouts like we got back here in January, where the market just kind of broke out, but not really. In other words, you had the SPX break higher, the Dow pushed a little bit higher under very light volume. The NASDAQ and the Russell weren't really following, right? So I was thinking that was going to fail, which it did. That failed last week, and typically what I'm expecting when the market breaks, in other words, you get a false breakout and it breaks back under your previous resistance levels, you usually get a fairly aggressive down move. Normally what we would have expected when this came down was a move right back down to this 2065 level on the SPX. That did not happen. We got a nice bounce off of there, pulled back a little bit on Friday, but this is relatively tends to be bullish. So, that being said, what I would expect here is probably a continuation of what we had. The SPX has basically been tracking this trend line that's been in place all the way back, if you go for a 10-year chart, all the way back since the bottom of the market. We've been pretty much gaining at this level, and we're still tracking that. So I would expect us to try and at least hold that trend line area right into here. Maybe drop down a little bit below it. It has done that a couple times, right? We had a drop below here. We had a small drop below here. But in general, bullish grinding up markets is, back and forth, but generally going up is kind of what I'm expecting, unless we get some sort of a change. Unless we get some sort of a drastic change going forward, then that's what I'm kind of thinking with all the markets here. As far as what that means for the Russell here, is likely we get more of a continued sideways movement here. Like I said, we had an extended sideways movement in earlier in 2014, had this breakout 2015, and now we're running into a sideways range again. So it looks like we're just kind of sideways, chunk higher, sideways, chunk higher on the Russell. That's what I expect. So good morning. Just a question. What does APM stand for? Essentially, Advanced Position Management, which is getting more on how to manage your positions more efficiently, better, making better adjustments, that type of stuff. And then we have some advanced personal management, which we have an extensive session on stress and fear and how to deal with that and how your mind works. It's really cool. So everybody really enjoyed that in the program. All right, so let's look at our positions, drag up our option view. I guess it was Friday, because we didn't have one last Monday because of the holiday, but last Friday, we were looking at this bearish butterfly and essentially saying, hey, I'm only 1/3 entered in this position. I never got 2/3 entered, and the market's been so sideways that the trade's doing really well. Typically when this happens, what I like to do is I like to lower my profit target to $10,000. I come into the $10,000 range, I exit the position. Well, that actually happened on Tuesday. So let me just, I'm not sure what time, but I'm just going to pull back to noon time here. We got the pullback on Tuesday, which pulled this up over a little bit over $10,000, which is a little bit over our level here. So let me just hit a time here in our T-log. So let's see, I exited this position at 1500, so towards the end of the day. So by the end of the day, let's just go to 1430 here. This was pulling up over $10,000, so I went ahead and just closed that position out on Tuesday. That was a nice opportune time to come out. This is what we look like. As I was talking in the APM seminar, actually, we're talking about one of the things that we go over is optimal entry times and optimal exit times. And one of the optimal exit times is essentially when you're on the top, when you're the marble on the top of the hill and you're saying, I would never leave this day. This is a good time to exit. And the trade was pulled off at a profit of slightly over 20% of planned capital, which is going to be running almost 100% of our, actually it may have even been 100% of our invested capital. So really nice bearish butterfly trade for June. Let's go to our June M3. This did get a few adjustments. Let me just see when the first one was here. Tuesday. So essentially, on this Tuesday here, all I did is I ended up rolling my 1060 call up to 1140 1140. And the reason I did that is because the darn option view keeps losing my 1060 call, and I'm just kind of getting irritated with that. So as you can see here, right now the position happens to be missing the call, so the profit and loss and everything is not correct on it. So I'm just going to move advance to the end of the day here. And it should show me the call now. Yeah, so this is the actual position now. The call was rolled up to 1140 just for that purpose, just an irritation thing. So nothing rule-based there. This is what the position actually looks like as of Tuesday. So moving forward here, on Wednesday, I actually was starting to run into a delta issue. So let me just go Wednesday at 1500. Typically, if I'm at the edge of my tent, I'll show you this position here. Typically, if I'm at the edge of my tent, I like to be at around -75 or not higher than -75. I'm actually a little bit outside here, so my delta limits were pushing a little bit high. So I just did 1220, 1230 verticals here to flatten that out a little bit. If I move forward a half an hour, you can see that option push up into the 1230s. That flattens us out to around -50 and puts us in a position that looks like this. Then, of course, Thursday and Friday, the market came down, so there were no further adjustments there. Let me just take a look at Friday to show you the position. And this is what we look like as of Friday. So we're still sitting at basically about break even with this trade. I think we got knocked around a little bit when the market pulled back, and just the timing of 56 days happened to not be the best day to enter this. But everything's going fine. No particular problems there. So I just have a question on the M3. It just says, in a low volatility market for M3, is it a good idea to be less negative vega than normal? No, I usually hold my negative vega numbers just as high, sometimes higher in an uptrending low volatility market, mainly because I'm going to tend to get a faster drop in my T+0 line. So if anything, I tend to be hold a little bit more negative vega. And yes, I understand that we have a greater chance of volatility rising when it's particularly low. However, these typically tend to be very resilient to a down move. That being the case, in a low volatility market, there's generally not a concern that the market's going to come down as far as the market participants go, and you generally get a rising market, and usually your risk of taking a drawdown is more up here than it is back here, if I'm properly positioned. So I don't usually do that. So that is where we're sitting with this particular M3 here. If I go to our rock trade, that actually had no adjustments. So I entered that 30 days to expiration. I believe that was last week. Here is where we're sitting. So when I entered this position here, I did 4 1280 butterflies on the call side, and I did 10 1240s. The position looks like this here. I actually made a mistake. No, I didn't make a mistake on entering this one. 1240, 1280, that's good. So here's what our rock position looks like. So everything's looking really nice on this rock trade thus far. The market's been so flat, we've been gaining a lot of value. So it's looking good. Let's see, our last June trade is a June V Condor, which is not doing so well. So if we're going to talk about an Achilles heel with the V Condor, it's when the market comes down, you end up having to buy back some of these puts, and then it bounces and hangs in the middle. Historically, this is very, very rare. Typically, when you get knocked out, your market's going to continue up, and you're going to get a good play on the straddle, and you're going to get some sort of a rise up into this area and do fairly well. Right now, we are sitting in this position with negative theta. We're at positive vega. We are essentially waiting for the market to move and play off the straddle. What I could do here is I could obviously sell out this straddle. I could sell the position and leave. And if the market continues to do what it's doing and stays here, then at least I'd make something. Historically, however, If you've taken this and you've back traded it since, I don't know, 2002, for example, and ran it all the way forward, historically, I am much better off leaving the straddle in and playing the straddle, because typically at some point the market has some sort of a significant move, and when it does, you make your money. So what I'm going to do here with this, or according to the guidelines, is I really do not touch this until my delta goes over positive 50 here, and I'm ahead of these strikes. So I'd have to be, if we get an up move today, that might kick my delta over positive 50. If that does that, that will, from a rules standpoint, allow me to widen my straddle out and at least not take a loss, or a significant loss for the month. I mean, worst case scenario, this expires at, you know, exactly 1240, and I take a loss down here of $2,400. I wouldn't actually do that. I wouldn't let the market expire there. Essentially, if this thing draws down probably $1,000, I'm just going to exit it and move on. If I start hitting delta limits, I'm going to start raising the V here. Our other option is just to exit and just call it a scratch for the month. But that's typically how we're going to handle this. Like I said, I could have actually pulled this V out or widened it a lot earlier. And that would be, say, as soon as we hit negative theta numbers or positive vega numbers, I could have widened that out. Historically, that, you know, over a long period, and you know, like I said, maybe that would have worked out better for this trade, but historically we were better off staying in this position. So that's what we're going to do here, and we're just going to take our lumps. So that is that on our June trades. So I just have a Rockquake rock trade question. On the June rock trade, when do I consider making intraday adjustments? In rock position here, I am sometimes interested in making intraday adjustments just because my gamma tends to be so high. And typically what I'll do is I won't adjust it at the normal delta limit of minus 250. I'll take a limit maybe of minus 500, which I may or may not hit here. Right? I'd never hit minus 500 delta here because we're still too far from expiration for that to happen. So that being the case, I may pick a number. So I might take a look at this and say, hey, you know, when do I really come into a problem with an intraday move? And I might pick something maybe in the 1275 area here to actually start coming in here and piling in my options here and maybe there. So this particular case, I would say if we have over a 30-point move to the upside, I'd be looking at starting to put something in here. Realistically, to the downside, there's I could use double my maximum delta, which would be plus 200, which would put me back here in the range of somewhere around 1215 or so. I'd be interested in doing something intraday at that level. So at the normal adjustment limits, I am just not interested in doing anything intraday, but I would pick up here something in the area of plus 30 points on this side and double my normal delta to the downside for intraday stuff. As far as using the normal numbers, I don't think I would. The only time I'd use the normal numbers to adjust intraday would be like if I was maybe 3 days to expiration, or usually the day of expiration. If the volatility is really high, if the volatility is really low, I might do it 3 or 4 days to expiration. Was the June bearish butterfly entered based on the 80 points above the 60-day low rule? No, it was just entered. The bearish butterfly we're doing here is just simply 56 days to expiration entry with no charting at all. So we're just doing the standard bearish butterfly. On the super simple spread trade, or the super simple bearish butterfly, which is a different version of the bearish butterfly in the super simple spread trade program, that wouldn't have been entered. No, we wouldn't have entered a bearish butterfly this month. So we did not. So there was not a bearish butterfly entered at that on that system. But here we just enter it every month. That's a monthly trade, so we're going to enter it regardless of where the market is. All right, that is it for our June trades. Let's just quickly go to our July trades, which essentially have had no adjustments, but I do want to just discuss something on the bearish butterfly for July. So here is our July bearish butterfly. It was just entered at 1220. I did have delta theta ratio issues on this trade. So by the bearish butterfly guidelines, if I have a delta theta of more than 1.5 to 1, I'm just going to roll up this 1/3 of a position up to 1240. But I also said that I'm not particularly concerned about it when I'm far away from expiration, and I'm not particularly concerned about it until we hit an add point. So I have an add point here of the market end of day being over 1260. When that happens, because we have had delta theta issues within the trade, we're going to have a roll up to 1240, and we're going to add the 1260 going forward on this. Again, because we're going to have delta theta issues before we actually hit that add point. But I'm not overly concerned about getting this rolled up right away, especially far from expiration, just because I tagged that number 1 or 2 times. If the market is or holds significantly up today, I know the futures are up, and I am significantly over 1.5 to 1 delta theta, I will probably go ahead and roll this. But like I said, I'm not sitting there day after day looking at this number waiting for an opportunity to roll the darn thing up. I'm just kind of saying, hey, if when I hit my add point, it's going to need to be rolled up before I add. So hopefully that makes sense. But here's the position. No adjustments, and everything is looking fine there. We also have a July M3, which has had no adjustments. Remember, I was a little bit heavy on the butterflies because the volatility, or at least the market skews, were relatively flat. Here's what this position looks like here. Again, this is just up a little bit of money, but it's a real nice looking position. And last, I have the July V Condor, which is also doing fine. We're just kind of sitting here in the middle of the position. Again, we would like to see a creeping up market here to take advantage of both of these positions. So hopefully that happens. Hopefully from the V Condor standpoint anyway. Possibly not from some of the other trades, but from a V Condor standpoint, a grind up would be good for us here. And that is everything that we have. Let's see. I have heard they are intermixed and not one day on position and one day on oh, okay. Okay, so this is just in reference to APM. So somebody has heard that our sessions are intermixed. In other words, it's not one day on position management, one day on personal management, right? And I might speak to this as some are concerned. So what we try and do here is, my objective basically in all the programs, but particularly in the APM program, is to bring you to the next level of trading. And anybody knows, or not anybody knows, but what a lot of people don't know, but any successful people know, or extremely successful people know, that success in anything is 80% mental, 20% mechanics. So being I am a advanced NLP practitioner, a master practitioner in NLP, and we do a lot of help with people and how to make them perform better. So what I'm doing is I'm mixing psychology in with trading. So we do have some straight psychology sections, we do have some straight trading sections, but a lot of it is talking about your psychology while we're going over the trading sections and what to do and how to improve your trading and how to think about certain situations so that you can get the maximum benefit of trading the best possible, so that you're getting what you need to become better and better at trading. There's a lot in there too on how to improve your trading, and that's going to be all that stuff's going to be extremely beneficial no matter what you trade. whether you're trading directionally, whether you're trading my strategies, whether you're trading somebody else's strategies that are market neutral, we show you how to improve your trading, and that's the most important thing. So let's see. Please show the M3T log. I have to find it. There it is. Let me just close this. Let me run a T log. So there's the entry T log for the July M3, and if you're interested in the June M3 is here, and I can just expand that out and take a look at that. Is there a lot in the APM that wasn't? I'm just going to quickly tell you a little story of what happened in the program. The first day before we started, someone come up to me and says, I don't like this psychology stuff, and I hope there's not a lot of that in there, because I've heard all that before. And I just told him, I said, don't worry about it. You are going to enjoy this. And afterwards, he came up to me and he said, that was not what I was expected. That completely blew me away. And I've just never seen anything like that before, and how it's been done. You have not seen anything like this before as far as trading psychology. We talked about how you work and stress and fear, and how to overcome stress and fear, and think differently essentially while you're trading, and how to train yourself to become a better trader, because the way most people trade is they train themselves to become worse and worse traders, and even if they're doing well at the moment, they eventually blow themselves up because of the way they're training themselves. So we have lots of really cool stuff in there. And let's see, if I have another question. If I have 12 flies in the M3, can I move 4 flies at a time using Bearish Butterfly guidelines? Right, so it sounds like you want to kind of say, hey, well, I'm going to address this as 2 questions. First of all, there's nothing wrong with gradually rolling up butterflies. So if you have 12 butterflies and you want to start rolling them up early and just kind of continue with, in other words, instead of waiting till you when you hit an adjustment point, instead of taking them all and rolling them up at the same time, you can roll them up gradually. You can roll up 3, and then maybe another 2, and then maybe another 5 or whatever. And you can do that even with a 10 lot. It doesn't really matter. That's something that's perfectly acceptable. It's just adjusting more gradual. That's perfectly fine. Using the Bearish Butterfly guidelines, I mean, that's something that is ambiguous to me. I don't know how exactly you're going to use the Bearish Butterfly guidelines in order to do that, and I don't know. Then depending on what you do is going to make different effects on the trade. So anything you're going to do, I would go back and back trade it and see what you come up with. I mean, if you have in other words, that question is not specific enough for me to be able to give you a straight answer on it. I mean, in general, you can be more aggressive with rolling up the butterflies. Doing that has pluses and minuses. So in other words, it's going to work better in certain environments, not as good in other environments. And you need to know as a trader what the consequences to doing that are, so that you can make better decisions on when to do it. So that's what I have with that. And when did I enter the July Bearish Butterfly? I did 56 days to expiration, which is going to be on the 15th. I believe that was 56 days. If it wasn't 56 days, oh, actually, you know what? It may not have been, because I think we had an odd number. In other words, I lost track of the days to expiration because of, let me see what the 15th was. Or did I just do this early? What did I do here? I had some things going on before 8 p.m. and I got in this a little bit early. So I goofed up on entry on the July Bearish Butterfly. I actually got in 63 days, which was completely unintentional. In other words, there was no reason that I got in 63 days other than it was just I had a lot going on, and I said, hey, it's time to enter our trades. Did I do I think I probably did the M3 the same day. Yeah, I did the M3 the same day. I did it, so I did these a week early. So you can make a note of that. And that was my bad. That was a mistake that I did. So, but we'll just trade it out. Realistically, there is absolutely nothing magic about 56 days. You can go 63 days, you can go 70 days, you can go 45 days, or even 25 days. Well, not with a bearish butterfly, but with an M3. And that works out okay. I mean, a bearish butterfly wouldn't enter closer than 45, but it's, I mean, the systems are concepts that are very robust and work in many different situations. So there's nothing magic about those particular days. But yes, so let's just note that I did goof up here and not enter on the right days. But we can just trade it out, because in real life, what happens, right? We enter on the wrong days sometimes, and we make mistakes, and we should still be able to work with that. So let's just run with that. And that, I believe, is all we have. So I thank everybody for being with me here, and we will see you next week.